Hello everybody. As you know, Transaction Capital released our interim results for the half year ended March 2020 just a few days ago on Wednesday the 13th of May. And what I thought would be a nice idea was to give you a short overview of results in this next video. We're extremely pleased with our results, with TC delivering robust operational performance in line with our expectation of high teen percentage growth. Headline earnings increased 19% and headline earnings per share increased 18%. This was before any COVID-19 adjustments for expected short-term disruptions in future cash flows from assets held at 31 March. TC's performance did not necessitate these adjustments. It was a conservative approach at TC's election. These adjustments are also non-cash and before tax. In SA Taxi, we increased impairment provisions by 126 million rand, owing to short-term disruptions in our clients' ability to afford loan instalments. This was due to COVID-19 restrictions impinging on their ability to operate, and the impact of the April 20 loan repayment relief program, which I'll talk about a little bit later in the presentation. It's important to note that should payment patterns normalize, then these provisions will unwind to profit. However, should the COVID-19 disruptions manifest as credit risk, then the provision will be utilized to write off loans. In TCRS, we reduced the carrying value of purchased NPL portfolios by 65 million rand, owing to the expected short-term disruptions in collections. After these two COVID-19 adjustments, both headline earnings and headline earnings per share reduced by 17%. Additional financial highlights include an ROE in the high teens, despite a well-capitalized balance sheet. TC still has 800 million rand of undeployed capital and elected not to declare an interim dividend to preserve financial flexibility and liquidity. Finally, net asset value per share increased by 9%. Throughout this presentation, I will generally talk to results before the COVID-19 adjustments. Financial highlights at SA Taxi include headline earnings increasing by 35%. This is all organic growth, driven by a 14% increase in gross loans and advances. Despite an increase in the NPL ratio, the credit loss ratio improved to 3.8%. SA Taxi's return on equity still remains above 20%. At TCRS, headline earnings increased by 23%, driven by the strong acquisition and collection of NPL portfolios. TCRS invested 556 million rand in NPL portfolios. That's up 27%, resulting in the carrying value of purchase book debts up by 64% to 2.8 billion rand. Non-interest revenue increased by 19%, TCRS cost-to-income ratio improved again, and our return on equity is in the high teens. Until next time, stay safe, stay healthy, and stay productive.